24th of September 2013. As you can see, today we have very interesting price action in Great Britain pound US dollar. I had my sell stop order triggered at Victoria. Can you increase a little bit the zoom at 1.5970? This was actually the 200 simple explanation moving average area. I put here a sell stop because we had in before the FOMC release. So my sell stop order was triggered, and then price has made the pullback to 1.60. Let's see how it will close the day. On Great Britain pound US dollar on the 4 hours chart, price is standing under the weekly main pivot right now after triggering the stops. I have another bearish entry at a sell stop order at 1.5940, and then I will try also to short 1.5890 at the last swing low here. Even if it's above the 1.5880, the weekly support 1 pivot point, and another short entry I have at the sell stop order at 1.5850. Okay, for the moment I want to see if price will close under 1.60 today. Otherwise, I will have to cover some of my short positions. Let me start with the disclaimer first. Trading financial instruments with high investment leverage constitutes speculative trading with a high level of risk. Therefore, a trader should not invest money that he cannot afford to lose. Please take full responsibility for your own trading decisions. My trading setup and analysis are valid only for my own trading plan and strategy, and do not constitute trading advice and signals for live trading. Okay, today we had on the fundamental calendar, but the German IFO information for Institute for Economic Research business climate, which was a strong market impact for the euro. 107.7 vs 107.6, but much lower than the forecast 108.4. I told you yesterday that I consider that the forecast is much too high. Euro dollar in the last 24 hours minus 5 pips, but it went much lower today to 1.3460. Let's do the euro dollar first on 1 hour chart. 1.3460 has triggered, as you can see here on this chart, triggered the stops on the 1.3470, the weekly main pivot. But I still consider price has a lot of room to the downside, at least 1.34, 1.3450, even if it makes just a pullback before a continuation. I consider also that we need to see price lower around 1.3350 to close the hidden gap that we have here from the release of the FOMC. Today, Great Britain pound US dollar has moved 42 pips to the downside, but has moved much lower to 1.5950, has triggered my sell stop order at 1.5970. So now it's around 50 pips higher at 1.6006. US dollar Japanese yen 8 points higher, standing around 98.90. Australian dollar US dollar has moved back under. So let's see also the Australian dollar. As I said, US dollar Japanese yen today has been moving sideways, has moved lower to 98.50. As you can see, has triggered the stops here at 98.50. Yesterday I told you we have a lot of stops here. Now it's moving back above 98.90 to trigger the stops above buy stop orders. So a lot of consolidation here, volatility to trigger all the stops. If we look on Australian dollar US dollar, Australian dollar US dollar has made quite a strong spike here to the downside, as you can see on the 1 hour chart, from 0.9390, 0.94 back to 0.9360. Has triggered the stops under the 200 simple explanation moving averages, and under, you can see here exactly the last swing low from actually the open from this week around 0.9370. Now it has triggered also the buy stop orders above the weekly pivot again at 0.94, 0.9410. Let's see what will happen next. Probably price will go lower. On gold, price today has moved lower back to 1310. We had, yes, they remember stops here, sell stop orders, large sell stop orders on the large volume on the sell stop orders. Now we have the next area at 1300, but we'll look on the order flow book very soon. Great Britain pound US dollar, as I told you, is has tested the 200 simple exponential moving averages at 1.5950. Now it's moving back to the weekly main pivot at 1.6020, but it's standing right on the psychological level 1.60. Let's see what will happen from there. What's very interesting is that New Zealand dollar 96 points to the downside today, quite a large move to the downside. Usually New Zealand dollar gives some signals on the change in the sentiment, in the risk sentiment. So today price has broken, has triggered the stops under 0.8310, 0.83, and moved very heavy to the downside, 50 pips. Fake breakout under the 0.8270, 0.8260, which is the 200 simple explanation moving averages on the 1 hour chart, and then move back around 30 pips to the upside. Let's see if it will confirm the move to the downside and go back to 0.82. Anyway, I don't want to talk about New Zealand dollar right now. On the calendar again, Great Britain pound mortgage approvals have come out better than the previous one, but lower than expected. 13.2 thousand vs previous 37.4 thousand and expected 30.6. Regarding the Monetary Policy Committee member speeches, we had a speech from Miles, a speech from Tucker. Now we have a speech from member Monetary Policy Committee member Bean and the FOMC member George. I want to remind you guys that we have the trade balance coming up from New Zealand, and probably today we had a premium speculation on this strong move to the downside. Let's see how it will continue. Conference board consumer confidence from the United States came out lower than expected, 79.7 vs previous 81.8 and expected 79.9. This normally should be bearish for the US dollar, and it is because after the conference board consumer confidence, one second. After the CB consumer confidence, you can see that price has moved a little back to the upside, especially on Great Britain pound, right around. Okay. Also, we had today retail sales and core retail sales from Canada. Better than expected, the core retail sales 1% vs previous minus 0.9 and 0.6% expected. Okay, if I look on some of the news, first of all, tomorrow I don't think we have very important news coming up. We have the trade balances I told you coming up in a few hours. Then we have the financial stability view from Australia, Reserve Bank of Australia Financial Stability Review. We have the German consumer climate, which may be important. Core durable good orders and durable good orders will be important tomorrow in the beginning of the New York session. We also have a CBI realized sales from Great Britain. Confederation of British Industry surveyed an index based on surveyed retailers and wholesalers, expected to decrease from 27 to 24. Also, core durable good orders and durable good orders from United States are expected to increase from minus 0.8% to 1.1%. The core data and durable good orders from minus 7.4% to 0%. New home sales also released tomorrow, expected to increase from 394,000 to 422,000. Okay. On Thursday, we have more important news from the Eurozone. We have the nationwide House Price Index from Great Britain, M3 money supply year per year from the Eurozone current account, and final GDP quarter per quarter from Great Britain. Unemployment claims, final GDP from United States, and pending home sales from the United States. And on Friday, we have a speech from Draghi that will be important. French consumer spending, German preliminary consumer price index. FOMC member George will speak again. 10-year bond auction from Italy. Member Evans from FOMC will speak. Core price index from the United States. Actually, the core personal consumption expenditure (PCE) core price index is not the investor core price index. Expected to remain the same. Spending and revised University of Michigan consumer sentiment will be also released on. Okay, we have the 2-year bond auction from United States. Yield 0.3480 vs expected 0.35, previous 0.3860. Much lower yield. This is a good signal for the United States dollar. Bid to cap ratio 3.09, this previous 3.21, average 3.20. Lower bid to cap ratio, lower demand. Mixed signals for from this bond auction. Bank of England Miles said misguided to think sharp rate increase is needed. Bearish signal for the Great Britain pound. Market talk of an Italian sovereign downgrade we had today. Also, market talk of bids in Australian dollar US dollar under 0.9360. It was just a fake signal because price has found support there and has just triggered the stops and then returned back to the upside. Moody's rating agency says US debt ceiling debate and potential government shutdown unlikely to affect the US credit rating. This is good for the US dollar. Expectation is that the US will avoid the shutdown and increase debt limits. So the rating agencies trust in the government from the United States. Fed Dudley says Yellen would be a very nice choice, fine choice for Fed chairman. Forward guidance is not just about the chair. Spanish T-bill bond auction today. Auction results 3.58 vs expected 3.5 billion. A range between 2.5 3.5. 3-month T-bills bid cover ratio 4 vs previous 4.1. Average yield 2.91. 0.2910 vs previous 0.1620. Higher bid cover ratio. This is higher yield. This is a bearish signal for the euro, but a lower bid cover ratio. 2.81 billion in my sell. So Spain sells 2.81 billion euro in 9-month T-bills. Bid cover ratio 2.64 vs previous 1.95. Average yield 0.98 vs previous 1.089. We have a mixed signal here because on the 9-month T-bills we have a bullish signal for the euro. Okay, let's continue with what's the most important part here. Let's continue with hello Sonia, nice to see you again. So what I expect, I think you were asking yesterday what I expect from the stability report. I think it will be bearish for the Australian dollar, but let's wait and see. For the moment, we have some conflictual signals, especially on on the Great Britain pound. And Great Britain pound has been very well correlated with the Australian dollar. So we had initially a breakout here under 0.94 triggering the stops, then has triggered the stops under 0.9360, 0.9370, and now price is moving back above 0.94 to trigger the stops, thereby stop orders. Main question is, where will the price stop? Okay, let's start with the euro dollar. Let's start the euro dollar. Now we have seen a fake breakout under 1.3475. Definitely a good bullish signal for the euro. On the open position ratios, we have right now euro dollar 70% bearish, bearish open positions. GBP dollar is back above 72% bearish open positions, while Australian dollar is 64% bullish open positions, 62% bullish open positions on gold, and we have US dollar Japanese yen 67% bullish open positions. You hope so? What do you mean? What do you hope? On a bearish you mean about the Australian dollar US dollar? Okay, so you can see that we have also in the Swiss Forex sentiment index 67% bearish sentiment on the euro dollar, 72% bearish sentiment on Great Britain pound US dollar, very well correlated with the open position ratios. Great Britain pound 71% bearish sentiment on the index, correlated with the 66% bullish sentiment on US dollar, which should see around 86, I think. Less than no, around 80% bullish, 80, 78, I believe, 78% bullish sentiment on bearish sentiment on Great Britain pound US dollar, and also around 70% bearish sentiment on 69% bearish sentiment on the euro dollar, as you can see here. Great Britain pound 72% bearish sentiment against the Japanese yen, 53% bearish sentiment on the euro Japanese yen, 65% bullish sentiment on US dollar Japanese yen. But US dollar Japanese yen, in my opinion, is extremely risky right now. One sec. Okay. Let's see on the euro dollar what we have on the order flow book. Open orders and positions. Euro dollar right now has 1.35 to the upside, the first important resistance, and to the downside we have again the 1.3450 and then the 1.34 as technical levels. 1.3450 is confirmed by the order flow battle between buyers and sellers, and especially at one. Then we have 1.34 more demand, and especially 1.3350 shows pretty strong demand. 1.3350, I apologize, and also at 1.33. No more stops then, just like yesterday. Buy stop orders above 1.35, especially at 1.3520. So what we have here in this chart is sell stops starting from 1.3470 and then lower at 1.3450. Bulls and bears fighting for the price there. Above this, we have, of course, buy stop orders, buy limit orders. I apologize. I want to remind you guys that we have also the stops under 1.3475 again, because it's the weekly main pivot, and it shows. Good night, Dr. Dow. Thank you for sticking by. Okay, above the current market price, we also have at 1.35 a battle between buyers and sellers, but the sellers are not that strong. We have some sellers around 1.35. Much stronger demand above this level at 1.3520. Then higher at 1.3550 we have supply 1.3550 supply, and then demand again above 1.3570. Definitely a good opportunity for the bulls to try to speculate here, for the speculators to try to bring the price higher. Much more, in my opinion, much more liquidity on the downside, especially at 1.3450, 1.34 area. As I said, to the side, then we have only demand 1.3470. Battle between buyers, as I said, also at 1.3450. 1.34 shows demand. Then also at 1.3350 around here. So here demand, but I think there we have gaps that need to be closed, the hidden gaps. Lower we have the 1.33 and 1.33 less demand than 1.3250, which shows the highest demand in the order flow book. Strong liquidity to the downside. High probability remains to the upside, especially that the price is still holding above the weekly main pivot. It's holding in this uptrend channel, as you can see. This uptrend channel that shows a pullback, and normally we should see a continuation now, but not before price will trigger again the stops. Again, let me check at 1.30. No, at 1.34 we don't have supply. I also see some buy stop orders at 1.36, a little higher. A battle between buyers and sellers here at 1.36, 1.3620. That provides some liquidity for the marketplace. In my opinion, even if price will go higher, it will make a correction. So even if it should trigger further stops at 1.3450, but I think if it goes under 1.3450, it will test again the 1.34 and then maybe go further higher back above 1.35 and even test the 1.36 before making the reversal that I'm expecting. On the other hand, the higher probability scenario, in my opinion, will be a move straight to the downside without any more pullbacks to close the to go back under 1.34, give a fake bullish signal here, and then close the gap till the end of the month at 1.33. We'll have to see then the reaction from 1.32. I expect price in the till the end of next month to go back to 1.31, even to break it to 1.30, but this will come only with a strong fundamental, which we don't have right now. We have strong fundamentals in favor of the euro. Okay. From on the order, so if you have any questions, fill them out now in the public chat. Let's see on the correlated range bars chart. I'm still bearish on the euro, but I want to see the initial reaction from 1.3470 right now on the weekly main pivot, which is the most important pivot of the week. Let's see on the correlated range bars charts. No signal yet, just the last signal, bullish signal from 1.3370. This means that price should continue further to the upside from the point of view of this chart. Neither any signal on this pullback on the 20 pips correlated with the 1 hour chart. We have the weakness signal from 1.3350. If price will go back to 1.3350, it should find some weakness, and maybe after a consolidation to break much lower to 1.3250 at least, but we're a long way from the level for now. Let's see on the 10 pips on the very short term. 10 pips. Last signal is a bullish one from 1.35, 1.3490. Bullish one which was confirmed with the breakout above 1.35, but it was a fake breakout. After that, the signal has failed 50 pips lower. We have seen a fake breakout to trigger the sell stop orders here under 1.3470, 1.3465. Then price went back above the weekly main pivot. Okay, let's move on to US dollar Japanese yen. If you have any other preference on the pairs, please tell me now. US dollar Japanese yen, which shows no clear signal right now. We're standing in a strength zone from here. If you watch in the back, this was the non-farm payrolls price action. So we have a strength signal from here from around 99, 98.50. It's still a strong support. It's also the area between weekly main pivot 200 exponential moving average, 200 simple moving average. It was confirmed 3 times already. We had a fake breakout here on the FOMC last week with the test of the monthly main pivot at 97.95 to close the hidden gap, the gap that we had from the beginning of the month. For the moment, today also we have seen some stops triggered. Let's see on the 1-hour chart. On the 1-hour chart, we had some stops triggered at 98.50, as you can see here. Buy stop orders triggered above 99 level and 98.90. So very good opportunity for the speculators to take all the stops here. Okay, what we have now? Again, sell stop orders at 19.50, 98, and now I see even more sell stops at under 97.70. Let's see on the 4-hour chart, it looks better. So strong demand between 98.50 and 98, especially at 98. We have a strong demand here at 98, the strongest in the order flow book, 97.95, 98. It's the last important swing low. Also, we have a battle between buyers and sellers at 98.50. 98.50 confirmed already 3 times. Also, fake breakout from last week from the FOMC meeting, but we also have strong stops. Strong stops also under 98 and especially around 97 point, close to 97.50, 97.70, 97.50. Strong stops here. As I said, demand is important between 98 and 98.50, but we also have stops there, stops that should provide liquidity for the market price to move lower. But we need to see how it will move lower. I showed you at the beginning of the week yesterday that price will probably make a consolidation with a lot of volatility. It happens already. I think price will go back to 98, back above 99.50. If we watch above the current market price, we have at first of all, we have above 99.20 buy stops. Bulls and bears fighting for the price, and then we have more buy stops above 99.50. The most important area to watch for resistance will be, of course, the 100 level, and then higher at 100.50. At 100.50, we see some more important stops, buy stops. But most important levels for this week will be above 99, 99.20, 99.60 for the moment, where we have bulls and bears fighting for the price, and a lot of liquidity, in my opinion, here. Some buy stops above 100 and above 100.50. So what this chart is showing is very clear. I think we'll see some volatility. I don't think we'll see a clear move neither to the upside or to the downside. What we have here is lower swing highs, higher swing lows, which show a consolidation. We're getting close to the vortex of this triangle that we have here. If I draw another trend line for this downtrend, we have a breakout, and this breakout has failed for the moment because we don't have a close for the weekly before 99.50, which is extremely important for the moment. Okay, so in my opinion, this will be a consolidation week for the US dollar Japanese yen. Price will probably trigger either first 99.50, above 99.50, then go back under 98 to test these levels and remain somewhere around 99, 99 point, above 99 maybe at the end of the week. On the other hand, a second probability would be for the price to move back lower first, because I think we have more liquidity there at between 90.50 and 98 levels, and then move higher and remain at the end of the week around 99, 99.50, with our probability to go further to the upside next week maybe. I think US dollar will strengthen, but always be prepared for panic situation, a panic situation that will generate, of course, strong bearish move on US dollar Japanese yen and all the Japanese yen pairs, because Japanese yen is stronger on is usually stronger on risk of sentiment than the US dollar. On the 40 pips, we have a bullish signal from 99.30, 99 area. Two bullish signals from 99, 99.40. Now price is standing around 98.95. If price will go and close today above 99, it will be a bullish signal to 99.50, 99.70, and then we'll probably get bearish move. I will stay out of the US dollar Japanese yen, definitely. We have another bullish signal that has failed around 99. You can see it failed big time after the FOMC. 130 pips, then strong reversal to the upside, 190 pips. Now I have another move to the downside, 120 pips. It's definitely a volatile move to try to, the speculators are trying to trigger all the stops. In the 10 pips, we have a bearish signal from 99.40, 99.30 that is already priced in, but I don't see any bullish signal. So here the highest probability remains to the downside back to 98.50, 98 area. Okay, let's see on Great Britain pound. At any time, if you have questions, comments, fill them out in the chat section. Okay, Great Britain pound, US dollar, my favorite pair for the moment. I'm trying to get as much as I can from this pair right now, but the magnets, especially the magnet at 1.6020, I see that also the daily pivot is standing at 1.6035. These magnets provide liquidity for the market price. I'm curious to see in the order flow book, probably we have buy stop orders there. Okay, as I showed you on the 1 hour chart earlier, sell stop orders were triggered already. Now I have buy stop orders above 1.6020, 1.6035, 1.6050. We'll see in the order flow book in a moment. Great Britain pound, let me check it out. I would really like to get my hands on the order flow book from Duca's copy, but it's difficult. Okay. So we have strong ratio on the bearish open positions, more than 72% in Great Britain pound right now. A lot of them are on profit, but most of them are opened around 1.5950, 1.5970, just like mine. On the sell stop orders, definitely speculators will try to go higher, probably above 1.6050 again before, if they will want to continue lower. So what we have right now is 1.5950 strong stops again till 1.59, where we have the first important area of demand. Bulls and bears fighting around 1.5950. Let me just put on Great Britain pound. I think it's better to put it on the 1 hour chart, because to put the order flow book on the 1 hour chart, um, because on the 4 hour chart the spread is too, I mean the range is too wide. Okay, so we have at 1.5950 a battle between buyers and sellers, with more sellers, slightly more sellers. Again, I have a sell stop order at 1.5940. Let's see if it will be triggered. If it will be triggered, trust me, price will go back to 1.50, 1.59, 1.5870 in a heartbeat. Let's see what will happen there. At 1.59, we have a large demand there at 1.59. Then under 1.50, actually till 1.59 we have even more stops. Under 1.59 again stops, at 1.58 demand, and then more stops till 1.57. So as I said, that 1.58 more demand. Stops all over the place. As I said, stops even lower than 1.5950. Under 1.59 again stops. And a lot of stops all over the place here, just like my stop is 10 1.5890, 1.5850. At 1.5850 I don't see demand for the moment. If we look back on the 4 hours, you can see that first important support is standing around 1.5770, around here, 1.5770. Don't take into consideration this order flow book is for the 1 hour chart. So here would be a very important support. This will be also around slightly around 38.2 Fibonacci retracement, 61.8 from this uptrend after the non-farm payrolls. I mean, 61.8 should be around 1.56. That would be my second target. My first target will be around 1.57, where we have first stronger demand. Okay, let's look back on the 1 hour chart. So for this week, the target should be around 1.58, at least 1.5770. Above the current market price, we don't have such strong liquidity. Above, I was expecting to see more buy orders at 1.6020, 1.6035, 1.6050. I don't see that many, but I don't see neither supply. Some supply is gathering around 1.61. Even if 1.61 doesn't show that many orders, doesn't show a confirmation from a technical point of view in the past. So what we have here is very little volume. Buy stop orders above 1.6020 and around 1.6050. At 1.61, one more buy stop orders, and more important buy stop orders area at 1.6150. This shows a high probability that price will go lower, of course, in my opinion. We have lower swing lows already on the 1 hour chart. It looks like a bearish trend, a downtrend has started already, as you can see here. A downtrend that has a possible target around first target around 1.59 for the moment, and then we'll have to see if it will go lower to 1.58 on the fifth wave, perhaps. Flow book, even if the uptrend will continue, the order flow book shows a high probability that maybe first we see the stop orders trigger at 1.6050 again, and then price will test the 1.59, trigger the stops under it at 1.5870, 1.5880, and then perhaps to move higher back to 1.61 lever, and even higher to 1.6120, 1.62 perhaps, before making the reversal. On the other hand, the higher probability scenario for this week is for the price to go back under 1.50, 59.50 again. Initial to give a fake signal, a bullish signal at 1.59, and then to continue lower for a target this week to 1.58. This is what I actually expect. Then possible pullback back to 1.59, and then a continuation even lower next month. Next month, the target at 1.55, of course. I want to remind you guys that at 1.55 we have some gaps that need to be closed. If we watch on the 4 hours chart, so initially we have this gap at 1.5870. Then we have another gap, if you remember, from the beginning of the month, around 1.55, 1.49, 1.5496. This is my target for next month, till the end of next month, of course, with possible support from the FOMC, from the Federal Reserve. Okay, let's move on to Australian dollar. Australian dollar, we'll talk about Australian dollar on the 4 hours chart. Which also has a gap from 0.89, a gap from 0.9250. But the better opportunity, in my opinion, is on Great Britain pound. Anyway, I may be wrong, like I was wrong in the beginning of the month on Australian dollar. I thought 0.90 will hold, and then I have bet on 0.9150. Now price has broken 0.93, 0.9350, which was my strongest resistance to hold the downtrend. Now higher probability remains to the upside, of course, but I still consider that price will make another test at 0.89. Huge stops at huge volume on stops at 0.9050. Twice the volume as the supply, as the demand, and then some demand around 0.93. Also stops there. 0.9250, nothing important. So huge stops at twice the volume as the demand at 0.9350. This shows a very strong probability that price will break lower. At 0.93 we see some demand, and then stops again to close the gap from the beginning of last week. 0.9250, I don't see any demand. I see demand at 0.92, but not nearly enough all the possible breakout to the downside. 0.92, 0.9220. Also, you can see it was very close. It's very close to the last swing low, and the confluence here, technical key level confluence with the 200 exponential move gap on the 4 hours chart. Lower, we have just We don't have anything important till 0.90, where we have a strong demand. 0.90 strong demand in the order flow, strongest demand actually around here. Possible target for me for next month. Next month, I also think price may go to 0.8089. So what we have here, as you can see, it's this uptrend wedge, that still has a strong support. A price is standing right on the weekly main pivot at 0.94 right now. If we watch above the current market price, above 0.94, 0.9420, we have buy stop orders, and then above 0.9450, more buy stop orders. 0.95 supply. Buy stop orders here, and then supply at 0.95. Also some supply on 0.9450, but the demand is stronger. What this chart is showing us, of course, there's a high probability, even if we have more liquidity to the downside 0.9350, there's a high probability that the price will try to trigger first this buy stops at 0.94, 0.9450, and then go lower to 0.9350, and maybe even test the 0.93. Speculators may try to give a fake bearish signal and then not close the gap and continue further to retest the 0.95 again before making a sharp downfall. On the other hand, the higher probability, in my opinion, after taking the buy stop orders here, is to trigger the sell stop orders at 0.9350, close the gap, and retest the 0.92. Maybe even this week. 200 pips is not that large range, in my opinion. Give a fake bullish signal from 0.92 with the retest at 0.9250, maybe even 0.93. And then next month to go back to 0.90. We'll have to see the reaction from there, probably with some consolidation, and then a continuation lower to 0.89, maybe till the end of next month. Okay, let's see on the correlated range bars chart. $40 pips. Bearish signal from 0.9450, 0.9420. Another bearish signal from 0.95. And we have some strength around 0.9370, which was also confirmed twice, the open with the gap to the downside from Monday and today on the test of this, I believe it was, yeah, a test of 200 simple exponential moving averages, indeed. 40 pips shows conflictual signals. Anyway, 0.9350 is definitely a strong support and hold stops under it. On the 20 pips, we have a bearish signal from two bearish signals from 0.9450, 0.9410. Again, if price will go back to that level, it will be a very good weakness entry point for the entry of the speculators to go back to 0.93, around 150 pips to the 200 simple exponential moving averages on 20 pips range bar chart. Okay, let's see on the 10 pips. 10 pips, bearish signal from 0.9410, 0.94. If price will go back to that level, maybe we'll show again a fake breakout. Also a bearish signal from 0.9440. Yeah, a lot of bearish signals here on the 20 on the lower time frames, which shows a higher probability the price will go lower, but not before it will trigger the buy stop orders, in my opinion. Let's see gold. Let's see the gold. The gold, which shows right now definitely a higher probability to move lower. This was just a speculative move on the FOMC to trigger the stops. It has triggered the stops at 1350, 1360, 1370. Now it moved back to the downside, triggered all the stops of the bulls that entered on this spike. On the order flow book, I no longer see the area 1310. Yesterday we had huge buy stops and buy limit and sell stop orders. Now the area has moved to 1300. And buy stop orders we have above 1330, 1332. Yeah, it's normal, it's the weekly main pivot there. So what we have a battle between buyers and sellers at 1330 and under 1300. 1300 strong demand, extremely strong demand, but huge stops. Further, more stops at 1290 without any demand. More stops here. Definitely, the liquidity shows a higher probability that gold will go straight to the downside, maybe with another trigger of the stops at 1330. More buy stops. I don't see more buy stops from 1350 just supply, 1375 supply, 1400 supply. To the downside, first important demand I see around 1250. So no important demand. To the upside, as I said, just supply 1350, 1370. I expected to see some buy stops above 1370, but no. And of course 1400. As you can see, definitely the highest probabilities to the downside here, but unfortunately a lot of retail traders are expecting this bearish scenario. What we have here, in my opinion, is definitely a good speculation opportunity for the speculators, not for the retail traders, to trigger the stops first at 1330 and then a sharp move to the downside under 1300 to trigger also the stops here, maybe even go lower to 1275, and then another sharp reversal back above 1350. This will probably be one of the largest probability scenarios right now to trigger all the stops but not give a clear signal. On the other hand, we could get a fake bullish signal from 1300 and then price to continue lower to 1250, where we have a 1250, where we have the first demand. So I consider this will be the highest probability scenario right now on gold, and bearish on gold. But remember, guys, that we have buy stops above 1330. This will probably speculate it. Okay, this is for the gold. Let's look quickly on the daily charts to see if we have any signals. If you have any other pair that we want to talk about, tell me. So on the daily for the gold right now, today we have a bullish signal. Actually, if price, especially if price closes above 1330, I don't think it's a large probability. We have another $7. I don't think we'll see $7 to the upside. So on the daily chart, gold looks pretty bearish for the moment till 1300 with some volatile moves. Great Britain pound, very small volume. The volume was higher here in the FOMC day, which is a bearish signal in my opinion. Fake breakout above 1.6050, the monthly resistance to pivot point. But today, not a clear signal. I want to see if price will close under 1.60 again. I think it will close above 1.60, not to give me the bearish signal that I'm expecting. Okay, if I look on US dollar Japanese yen, just as expected, no important signals here. The consolidation will continue on the daily. Euro dollar, also not any important signals here. Higher probability for a lower pullback 1.34 before a continuation, even if it goes higher. But I think this gap should be closed at 1.3290, 1.33, 1.3280 should be closed before the end of the month. But let's wait and see. We have the 200 simple exponential moving average standing around 1.3150. Definitely good support between 1.3150, 1.31 level. Australian dollar, US dollar. On the daily, that this one doesn't show any clear signals. This uptrend, I think, is just even if it has more than 600 pips, it's a fake over the mid and long term. It's just a fake pullback to try to show some technical, in my opinion, some technical signals. Here you can see the double bottom with a slightly higher swing low, and then a sharp move to the upside. But with the gaps, these gaps have kept a lot of bull retail traders out of the market. Okay, now let's see what levels we have right now. 0.94 in Australian dollar, still standing under the weekly main pivot. Euro dollar is making a small pullback from 1.3490 back to 1.3483, but we have 1.3475, the weekly main pivot. We're still standing above the weekly main pivot. Japanese names on the bid at 98.50. Offers we have in place at 99. Market took off offers in 99 and US dollar Japanese yen. Okay, Great Britain pound US dollar is still standing above 1.60 but hasn't tested yet the 1.6021. I think it might test before going lower. I also think it might test the 1.6050 like I said before. So if you have any questions, now it's time to put them because I have to wrap up. Again, the disclaimer: trading financial instruments with high investment leverage constitutes speculative trading with a high level of risk. Therefore, a trader should not invest money that he cannot afford to lose. Please take full responsibility for your own trading decisions. My trading setup and analysis are valid only for my own trading plan and strategies and do not constitute trading advices or signals for live trading. I cannot believe that today I managed to cover all my pairs. Usually I don't have time because of the strong fundamental analysis. Today not many fundamentals, so I had time to cover them. I'm still short on Great Britain pound US dollar, and I will remain short until price will go back above 1.6160, maybe to test 1.62. But even there, I may hold the position. I want to see first the reaction at 1.60 and 1.61. I have a lot of levels, technical key levels to watch before I decide what to do next. Okay, thank you, Victoria. I have to finish. I'll see you again tomorrow. Have a nice evening and a good trading week. Bye.